Palantir is up over 2,000% in 3 years. Microsoft is sitting at a $3.5 trillion valuation. Two companies, two completely different risk profiles. So which one actually makes more money for long-term investors from here? Because here's a twist. Palantir is growing revenue over 60% year over year, and the growth rate is speeding up, not slowing down. Microsoft, on the other hand, they're growing slower, around 15 to 20% a year, but it does look like clockwork, and the company's got more than $100 billion in cash and equivalents. So why are investors piling into both stocks for totally different reasons? Well, that's the question I'm going to answer today. And of course, which one is a better buy? Because on one hand, most of us aren't seeing how quickly Palantir converts companies into paying customers through AIP. And if that curve keeps rising, man, the upside is real. But if it stalls, that valuation collapses. On the other hand, Microsoft, they don't need any new customers, not at all. They can bolt AI onto their contracts that already run for years. That is a very different kind of power. So in the next few minutes, you're going to see exactly where I think the real risk is, where the real upside is, and which stock fits which type of investor. If you're new to the channel, hey, what's up? My name is Rick Orford. I've been trading since 1999, and I'm not a financial advisor. That is a good thing. I break down the numbers so retail investors like us can make smarter, more confident decisions with our money. I want to thank The Motley Fool for sponsoring this video. The Motley Fool is a company that provides investing insight and stock recommendations for investors of all skill sets and risk levels. And you all know how much I love researching new stocks and trying to find the next best investment. So I'm proud to partner with The Motley Fool to bring you 10 stock picks from their popular product, Stock Advisor. Stock Advisor has beaten the market by almost 6 times. Go to fool.com/ricko to get your 10 stock picks right now. Now, right out of the gate, I'm going to say that Palantir is the uber growth option here, right? The numbers stack up, right? Revenue is growing at over 60% year over year. And the important part is that it's speeding up, not slowing down, right? Most tech companies, they see their growth slow down as they get bigger. But Palantir is still bucking the trend. They're doing the opposite. So how long can a company outrun gravity, so to speak, right? Because that's kind of like what's happening. Well, the big driver for Palantir is their AI platform called AIP. This thing is bringing in commercial revenue, and fast. Fast enough that Wall Street didn't expect it, and it's why investors are paying attention. At the same time, their government contracts with the defense and intelligence agencies, well, they keep expanding, and that gives Palantir a really strong foundation most growth companies, they'd only kill for. Now, Palantir's margins are getting better. What does that mean? It means that they're making more money on each dollar of revenue, which is what you want to see in a maturing growth company. And if those margins can keep expanding, gosh, the valuation really starts to make sense today, right? AIP lets companies build AI applications without hiring data scientists that are very expensive. And that is a massive unlock because it removes one of the biggest bottlenecks in AI adoption amongst enterprises. Data scientists, well, like I said, they're expensive and they're hard to find. So Palantir removes that barrier completely. They run boot camps where they convert interested companies into paying customers in weeks instead of years. And that's a huge difference in how fast they can grow. And if they can keep converting customers this quickly, the revenue runway gets a lot longer. And of course, the use cases are real. Supply chain optimization, fraud detection, military logistics, you name it. These aren't hypothetical ideas. They're real problems with real budgets that are behind them. And Palantir also sells the entire workflow. Once a company starts using Palantir's system, switching to a competitor becomes incredibly difficult and, more importantly, expensive. And that's good for keeping customers long term. Now, let's talk about what you'd actually be buying, right? The stock currently trades at $162 a share right now. And that price comes with expectations that are already baked in. It's up over 2,000% in the last 3 years. I mean, those are incredible returns for early investors. But there's a reality check. No stock runs like that forever without proving that it can continue to deliver. Not only that, the stock trades at nearly 130 times price to sales. It means you're paying $130 for every dollar of sales the company is expected to make next year. That's incredibly expensive. And at that valuation, even a small misstep, bad quarter, anything, a bad word, can hit the stock like a hammer. I say it's priced to perfection. And you can see it in the stock. It swings hard. There's also concentration risk. Government contracts still make up a big chunk of revenue. So if that were to slow down, it's going to hurt. And that dependence makes Palantir more sensitive to political and budget cycles than most people realize. Personally, I think the market is pricing in years of perfect growth. It means Palantir has to execute perfectly to justify this price. And perfect execution is difficult, and the market knows it. So if the valuation is so high, why are people still buying Palantir? It's the total addressable market that keeps growing as more companies adopt AI. I mean, once Palantir gets into a company's operations, those switching costs, they're expensive. They create a strong competitive advantage, right? And investors love businesses that are hard to rip out once installed. Now, if you prefer stability, Microsoft is a very compelling option, though this is a completely different type of investment. Think of it as the steady eddy in a very noisy AI market. Microsoft has a current market cap of around $3.5 trillion. So big that wild speculation doesn't really apply here. But that stability comes from having multiple businesses all under one roof. Azure Cloud Services, Office 365, Windows, LinkedIn, and even gaming. So when one segment slows down, the other one picks up the slack. And the company grows the revenue about 15 to 20% a year consistently and without drama. And consistency might not be flashy, but it compounds. Microsoft also pays a dividend and has a rock-solid balance sheet with $28.8 billion in cash and $73.16 billion in marketable securities. So they've got over $100 billion that they can use however they want. And very few companies have that kind of financial firepower. And that kind of cash gives them options during downturns for acquisitions or even shifts. Also, Microsoft's approach to AI, very different. They invested $13 billion into OpenAI, and that investment gives Microsoft access to GPT technology across all their products. And with that access, they built something called Copilot that's now in Office, Azure, and Windows. And hundreds of millions of people already use these products. So adding AI is an upgrade, not a new sale. So that means huge adoption without needing to convince a new audience. And Azure AI services, it's growing over 40%, but it's part of a much bigger business. For Microsoft's commercial customers who already have multi-year contracts, AI is an add-on that they can sell. They don't have to win new customers. They sell their products to existing customers. I think that's a much safer way to make money from AI rather than selling it to other customers. I mean, upselling is always cheaper than customer acquisition, and Microsoft knows that probably better than anyone else. But what exactly makes Microsoft the more stable option? Well, it's the contracts. The enterprise contracts run multiple years, and they all have recurring revenue. It means that Microsoft knows roughly how much money is going to be coming in quarter after quarter and year after year. If PC sales drop, cloud growth is going to make up for it. If one business slows, the other one picks up the slack. And this diversification is one of the strongest safety nets that you can get in any business, let alone technology. And of course, also Microsoft also faces less regulatory risk than other mega caps like Meta, Google, or Amazon. They're not in the antitrust spotlight anymore. been there, done that, right? Got the postcard. And management, they've even proven that they can handle the major technology shifts. They've also navigated the move to cloud computing successfully, and now they're doing it again with AI. I mean, leadership matters when the entire industry is changing. But, there are a couple of things that you do give up owning Microsoft. For example, the stock probably won't double in a year like other AI stocks might. It moves with the overall market. So with Microsoft, you get steady growth, maybe 15, 20% annual growth, not 50 or 100%. And that's the trade-off. Lower upside, lower stress. But get this, you also get downside protection. Microsoft has made it through the dot-com crash, the 2008 financial crisis, COVID, all without any problems. And that record matters, especially if we were to hit rough times ahead. History doesn't guarantee the future, but it is a strong indicator. So which stock is a better buy? Well, choose Palantir if you can handle a 30 to 40% drop in value without selling. If you've got a 5 to 10 year time horizon at a minimum, you're willing to ride the big swings. If you believe AI adoption in enterprises is still early and has a long way to go, and if you want a focused bet on one AI idea where the upside could be massive. Just remember though, focus cuts both ways. High upside, high volatility. Now, if you prefer to sleep at night without worrying about your portfolio, if you want AI exposure without the speculation, if you value having multiple businesses all in one stock, and if you care more about protecting your money while still getting growth, Microsoft is the better bet. It's for those who want predictability without sacrificing innovation. Actually, I've owned Microsoft for over 10 years and will probably hold it forever. So yeah, I'm bullish on both companies, but if I could only pick one, I'd stick with Microsoft because it's the kind of investor that I am. But what about you? Which company would you pick and why? Let me know in the comments below. And while you're there, if you found the video helpful, do like and subscribe because it helps others find the video, it supports the channel, and you won't miss out on my future deep dives. Well, folks, that's it for me today. I wanted to thank you so much for watching, and I'll see you next time.